These conferences are often a marathon for a lot of people, particularly staff, but they also are for various people who come and go. We've had 400 people here registered for the conference. Obviously, none of them appeared at anyone all at the same time, except for lunch, it seemed. But nevertheless, it's been a very, very successful conference. One of the most important aspects, and really the final aspect of any infrastructure project, of course, is the financing. Our members have for years said the most difficult part of their work is securing financing. So we are trying to provide with the last panel the aggregate sources of financing for your work. To lead that, and following the panel, there will be a special guest from the African Development Bank, and then we will conclude this program. So to moderate this panel, from the XM Bank, who is the board on the directors of the XM Bank, Wanda Felton. Wanda.
Thank you. Thank you so much. It's quite an honor to have the opportunity to moderate this panel because we have such sophisticated institutional investors here and financial resources, and they are significant in the amount of money that's represented. The panel is, the goal is to talk about aggregate funding, and certainly there is a need for more capital to invest in the many infrastructure projects that are available across the continent. Exim Bank, just to give you some sense of the scale of what we're seeing, has $10 billion of pipeline, both infrastructure and transportation related. The bulk of it is related to infrastructure, at $8 billion for infrastructure. And we would like to explore the many opportunities to invest in infrastructure in sub-Saharan Africa, but also to talk about how we might collaborate as institutions in order to unlock the full potential that's available. And so I will start. I believe that you've all seen the bios of the panelists. So rather than spend time on individual bios, I'd like to just ask each panelist to talk about, very briefly, their institution, what types of financing and deals they do, deal size roughly, whether they act as principals or agents, and what they're seeing, and just give that, start that off as a way to provide a little bit of foundation so that we can then explore some of the other questions that we are here to talk about. So why don't I start from left to right?
Okay. Good evening. I represent the Africa Finance Corporation, which is AFC. AFC is a $2 billion organization. It was set up in 2007 in Nigeria. It's headquartered in Nigeria. It's actually a supranational. It has financed over $2 billion in assets since inception in over 15 countries across the continent. We exclusively finance infrastructure assets. We focus on 5 sectors: heavy industries, oil and gas, telecoms infrastructure, transport infrastructure, and finally power.
Thank you. Mohammed?
Okay, well, good afternoon, everybody. I am Mohammed Saati. Maybe in the program you see a different name, Walid Abdul Wahab. He's my colleague, the Director of Infrastructure. Unfortunately, he has to go to another urgent engagement, so I am, if you allow me, I'm replacing him. I am the Director of the Country Programs Department of the Islamic Development Bank, IDB. IDB is another MDB, similar to the World Bank and the African Development Bank and the Asian Development Bank. It was created in 1974. Right now, we have just completed our 40th anniversary just in June with a big celebration in our headquarters in Jeddah. Currently, we have 56 member countries who are members of the IDB. However, our development assistance goes beyond the member countries. It goes to even some other countries. We are a AAA institution by all the 3 rating agencies for almost 12 years. About a year ago, our capital has been increased drastically to 150 billion US dollars. I would say luckily and by coincidence, that people have been always calling IDB as an infrastructure bank. At one time, maybe it was not a favorable term. However, we're very proud. Cumulatively, the IDB group, and we talk about the IDB group, both the bank, the dealing with the public sector, and our private sector entities, we have financed a total of nearly 100 billion US dollars. About 40 billion from the bank, and I would say 70% of them has gone to infrastructure in all types, whether it's transport, energy, IT, ICT, and the others. We have been financing in Africa. 22 member countries in sub-Saharan Africa are members of IDB. So we have been developing continuously all kinds of development financing. Maybe this is just an introduction. Maybe as later on I can maybe shed some more light on some programs. Thank you.
Thank you. Adesegun?
Thank you. PTA Bank, for those of you who don't know, is a specialist bank. We are also a development finance institution, but we are a hybrid in the sense that we have both institutional investors and sovereign shareholders. We work across Eastern and Southern Africa, all the way up from Egypt down to Mauritius, Zimbabwe, Zambia. We are essentially a corporate financing institution. We do enterprise finance, trade finance, infrastructure finance, of course. Our product range is mainly in the debt space, but we do a little bit of equity. We do some guarantees as well, and we are moving into the advisory space in addition to those. In terms of infrastructure, we are very active. We do a whole range. We're almost sector agnostic within the infrastructure space. In terms of investment structures, we're quite open-minded. It depends on the specific sector. Of course, there are gearing standards and benchmarks, and we look at those per sector. Generally, we approach the market in a responsive way. We pride ourselves on being fairly fast in terms of turnaround compared to the standards you would see in the marketplace. We tend to be a little bit faster than the typical institutions because we're smaller, a little bit more focused, and there's one or two more things I'll say, but maybe not now.
Thank you. And Uche?
Sure. I am the CEO of the Nigerian Sovereign Investment Authority. The NSIA was founded 2 years ago to manage revenues for the Federation of Nigeria, which is revenues in excess of what's derived from crude oil sales. We started with $1 billion, and then we've also added $550 million of third-party assets on behalf of other agencies of the Federal Government of Nigeria. There are 3 vehicles by which we invest. The first is described as a stabilization fund, and that's about 20% of our assets under management. The stabilization fund is designed to provide stabilization support in times of economic stress for the economy, and so this is invested in mostly liquid assets and kept as near for cash form as possible. The second fund we run is described as a Future Generations Fund. Now, this is a savings fund which we have invested in a diversified pool of assets from private equity hedge funds, public equity real estate, and other vehicles. And that is aimed at providing savings for the future generations of Nigerians. And the third thing we do is we run the Nigeria Infrastructure Fund. This is also 40% of our assets under management. And here we play primarily a principal role. We invest across the entire cap structure from senior secured debt to equity. And we play roles also that include either investing, sponsoring, or co-developing projects. We have narrowed our focus down out of what we describe as 18 investable sectors in infrastructure in Nigeria to 6. And these include motorways, power, gas transport and processing, healthcare, real estate, and agriculture. And the sizes of investments we make range from a minimum of $5 million to recently we just completed a $100 million investment in a gas processing and transport business to enable the power sector. So in a nutshell, that's what we do. We also have a small sub-part of what we do, which is social infrastructure investing. That is still very early stage, but it's developing fairly fast by way of pipeline. There are a few other things also I think we'll talk about in the course of the role of describing what the role of NSIA is. I'll stop there.
Well, thank you. I am going to start with Adesegun because You are, your institution, African Finance Corporation, it was a participant in the recent Africa Leaders Summit, and I believe you are a Power Africa partner. Yeah. And I'd like to understand what you, how you see your role in supporting Power Africa, and if you could talk a little bit about the recent transaction that you financed in Power.
Right, thank you very much, Wanda. We committed to support the President Obama initiative on power with about $250 million worth of investments. We've actually surpassed that now. We have an investment in Cape Verde, renewable energy asset in Cape Verde. We have supported the reforms of the power sector in Nigeria. We supported the Kainji Dam power project, Ugeli power project, and we also invested in a distribution company in Nigeria. Our signature project actually is a project which we just signed last week, and we're hoping to close at the end of October. It's an independent power project in Ghana. It's called the SEM Power project. We were able to mobilize $900 million for that project, $250 million as equity, and $650 million as debt. So that's...
And the capital came from international investors?
Well, the capital came from all over the world. We invested 31.8% in the equity. We were able to mobilize funding from South African banks, from DFIs, and we were also able to mobilize some funding from Japan. Thank you.
Very good. And Mohammed, you represent the type of, kind of like a DFI, a substantial amount of capital. You've been active in a number of countries for a long time. Can you tell us a little bit more about what you do and how, I believe that your institution would be one that Exim Bank may be able to collaborate with. I should tell the audience that we recently helped finance the Zito power plant in Cote d'Ivoire with the West African Development Bank, and I see opportunities to do similar things with your organization. So it might be useful to talk about how you have collaborated with others.
Sure. Thank you, Wanda. One thing is, as I mentioned, the bank has been really focusing on infrastructure. And again, we always believe that without infrastructure, you cannot really have schools, you cannot have hospitals. So infrastructure is really, really important, whether it's energy or roads. Maybe I shared with you the figures, which is almost, I would say, 70% of our financing since inception has gone to infrastructure. Now, the way we do it, if you allow me to focus on infrastructure, we do it through either sovereign financing, through dealing with governments, and we have financed many projects. I have a long list which I can share with everybody later on. At the same time, we are also working with the private sector, trying to encourage the PPPs, public-private partnerships. We have a good model like in Djibouti, in many other countries. And also, we have also done some equity through some infrastructure funds. We have an infrastructure fund 1, which was established in Bahrain, in the GCC, for open to all member countries, and it was 790 million fund. And by the way, it was in equity basis, in energy and transport, and the return was almost 20%, which is very, very significant. Right now, we're launching a second infrastructure fund, also in Bahrain, for all member countries, for 1.5 billion. Also, we have been working with the World Bank, with the Asian Development Bank, in various funds. Now, also, the way we operate, we work with all MDBs, bilaterals, and even local institutions. Also, we're very proud of an alliance, which is the coordination group, the Arab coordination group, which is the Arab funds. These are namely the bilateral, like the Saudi Fund, Kuwait Fund, Abu Dhabi Fund, and the OPEC Fund in Vienna, Badia in Sudan, and others, plus the IDB. This is a very strong coalition. If you go to like literature, this group, what it has done in Africa, really, in transport and in many infrastructure, it has done collectively very, very significant through regional integration in roads, in energy, in ICT, in sanitation, etc. As IDB also, we provide different modes of financing. And by the way, maybe I would like to emphasize that we are, because the name reveals, we are Sharia compliant. Again, we have to abide by the Islamic Sharia with all our transactions. And one thing very important, which I think the financial crisis has revealed, years ago, where we have seen the collapse of some institutions and some transactions. Through our modes of Islamic finance, we have sustained, the bank did not suffer at all, because all our financing is really built on real assets on the ground. And we use these assets to leverage our, what we call capital, I would say, assets. So the assets, whether it's a road or an electricity project or a substation, et cetera, can be used as real assets. This will give us security. So this is low risk. At the same time, we can leverage it to go to the market and raise money from the market to increase our financing to the member countries. So we have different modes of financing. Many examples that we have done, whether it's in power in Benin, in roads in Niger, Cote d'Ivoire. So in a nutshell, we are open to cooperate with MDBs, with bilateral, with regional organization, BOAD, ECOWAS, WAMU, all of them, to really for the service of the member countries.
May I drill down a little bit with you on
Please.
some of what you just said? 20% return, that's fully exited from the equity fund?
That's a special fund. It's called the infrastructure fund. And basically what we do is we go into equity finance, and sometimes we do mezzanine finance in some of the, I would say, productive projects like energy generation, whether it's in Bangladesh or in Africa or in Central Asia. Also highways, where they are operated through what we call this toll, where it's really income generation. But the intention really is not the profit for us. It's for the investors, because we raise money from the market, so we are bringing good return to the investors.
Absolutely.
Through our sukuk.
That's necessary in order to attract investors.
Absolutely.
I'm curious at how you were able to exit some of the deals, just a representative transaction, what the exit route was.
Sorry.
How did you get out of the investment?
Oh, each transaction has its own, I would say, in the terms. Like the intention is not to stay really in the what you call it, in the project itself. Is really IDB being there, anchoring the project, and bringing other investors to give them comfort and guarantee that at least there is a big institution who's sponsoring this project. After that, there is a kind of exit strategy, whether through IPO or some other mechanisms.
Good. Well, and not to focus too much on you, but with the amount of capital that you represent, I'm sure the audience is interested in hearing. You mentioned the sovereign wealth funds that you were able to attract to co-invest with you, the Arab funds. What countries do your co-investors have the most interest in when it comes to looking at transactions in Africa? Are there particular countries that you focus on more, and particular sectors that you look at more? And lastly, you mentioned being Sharia compliant. What does that imply for debt investors, international debt investors?
Okay, now, when it comes to countries, we're open to work in all member countries. And when I talk about Africa, we're talking about sub-Saharan Africa, whether it's in West Africa or in Central Africa or in East Africa, 22 countries. Also in North Africa, although we do consider them part of the MENA region. So we're open to work in all countries based on what we call either like partnership strategies with the countries or through programming. At the same time, when it comes to PPPs, we're called on by other lead arrangers. We could also be a lead arranger when it comes to PPP. Again, maybe to answer the question is, we're open in all countries. We don't say a specific country or not. It depends really on the project, it's the feasibility, the readiness of the project. Also here, I would like to emphasize one thing. It's not all our role as an MDB is only in the financing. We feel, especially in the private sector, that the MDBs have the role to play, which is really the preparation of the facility, the capacity of the implementing agencies. Private sector sometimes they're looking only for the bottom line, which is profit. So sometimes they refrain from going into some, I would say, risky projects or maybe first-time PPPs. So it is our role in IDB and also the other NDBs really to invest in the capacity, in the project preparation, in the feasibility study, etc. And then to kind of lay the ground with the basic infrastructure for the private sector to come in either in the O&M operations or through BTOs or BOTs. Now, when you talk about Sharia compliance, again, Sharia financing or Islamic financing is no different than conventional financing. It is really similar to conventional financing. The only, I would say, difference, or differences, I would say, is number one, it is all built on real assets. What do I mean by real assets? We have, for example, 3 modes of financing to finance infrastructure: leasing, installment sale, and istisna. And these are, sorry for the terminology. Leasing is, as the name reveals, is we go into a project and we could finance, for example, equipment like a substation or a power plant or even roads. And here we build or procure the assets and we lease it to the beneficiary, the government or even the private sector. The ownership remains with IDB during the lease period until IDB gets its own principal plus a markup which is LIBOR-based. So here you help the country or the beneficiary by renting. At the end of the day, the ownership turns to them. The other mode, which is istisna installment sale, where once we procure the product, which could be a part of a highway, it could be a building, it could be a power plant, it could be a substation. Once the project is completed, we turn the ownership to the beneficiary. So IDB bears the risk. And here again, there's another thing, which is risk is not all on the beneficiary. And this is also one of the features of the Sharia compatibility, which is you have to share the risk with the beneficiary. Again, there is this issue about what you call it fairness, about even the markup. The client knows from day one. And this is one thing basic about Sharia financing is from day one, the beneficiary should know what are they supposed to be paying to IDB by the end of the project. So there is hidden cost, this issue about interest buildup, being kind of like defaulted in payments. Sharia financing does not cater for that.
Okay.
Thanks.
Thank you. Ademaisu, we have done some deals together, and we met when you first took office. PTA Bank has evolved very significantly in terms of its strategy and its capital base and investor base. And I'm wondering if you can just tell us a little bit about some of the things that you're doing and what you're seeing in the countries that you're focused on.
Well, thanks. Yes, the bank has been very aggressive in the past few years. We've managed to grow at about 30% per annum, and we've been fortunate enough to attract strong partners, both at the equity level and also at the funding level. We like infrastructure a lot, and so we've been participating in this big push to get infrastructure moving in the continent, together with ADB and several others. Of course, now the Power Africa Initiative is pushing as well. We've had a very good run in various sectors of infrastructure, and increasingly in the renewable sector. We've done 2 wind power projects in Kenya. We've done a mini hydro in Uganda. We've got some independent power producing plants coming up, one in Tanzania, another one in Rwanda. One of those is in partnership with the AFC, who's also with us on the panel. And of course, now we're looking to take advantage of the new facilitation coming from the US side. So we are very excited about the new partnership we're discussing with you. And of course, there's a lot of interest in turbines from General Electric. We are looking at a number of transactions involving that. We are an interesting DFI in the sense that we don't just do long-term finance, we also do trade finance. So we work very closely with CCAs. We can play a very catalytic role in providing early-stage funding, not for project preparation, but more for the trade finance or the bridging finance that sometimes needs to precede the actual long-term finance that comes in. So the bank has managed to also reform itself to attract more finance from non-traditional sources in the DFI context, and in that particular sense, we've managed to attract new institutional investors to the bank, pension funds, insurance companies. We're talking to sovereign wealth funds. We're talking to other specialized financial institutions that have long-term capital available. They like our model because, of course, we are commercial in our approach. So we do keep an eye on returns, and we do have a dividend policy. So we become a very interesting vehicle for financing infrastructure in a way that's profitable. We've also started to look at new ways of investing risk capital into projects, PPPs in particular, and we should be launching by year end a new equity fund that deals with infrastructure in the COMESA region, the Eastern and Southern African region. And what we'll be doing there is we'll be putting in an anchor investment of about $25 million that will then be used as a basis to attract other investors. We'll have an SPV set up in Mauritius for this, and we've appointed a fund manager to be our JV partner on the fund. So that will help address the risk capital issue, because as a bank, typically we're limited to how much equity we can put into projects directly ourselves. So that's an exciting new initiative that's coming up. And I think there's been reference to PPPs. PPPs are not easy to do. We all know that it's an area of public policy that receives a lot of attention, but in practice, it's not so easy. So we feel that having a multilateral of a hybrid nature like ourselves, stepping into that space, putting in our own skin into the game, having the capital from our member states also in the mix can help create a little bit more comfort to private investors who want to come into those projects with an entity like us that has a lot of regional skin in the game, if I can put it in those terms. So these are some of the exciting initiatives that we've been pushing. And of course, just outside of power, we've done a very interesting PPP in Burundi recently. That was last year. It's a backbone fiber optic cable project, a private-public partnership that involved the national telecoms operator in partnership with 5 mobile telephone companies. It provides interconnectivity to Burundi, all the towns and cities, linking up to the eastern seaboard of Africa, where they can now link into all those big cables that have been put in recent years. So that's one very exciting project that we concluded recently. Again, it's a public-private partnership. I think there's a lot of traction that we're seeing in the region. I think it just from a financing point of view, one of the interesting things to highlight for the audience that's not aware is tariffs have been changing a great deal in the region. And I think anybody looking at the power sector in particular would want to look at what's been happening to the regimes, the tariff regimes in the region. You're looking at cost-reflective tariffing come through now. So you don't have a situation where power is being priced below the cost of producing that power. That's a very significant development. One particular thing I think that makes PPPs increasingly attractive in our region.
We have had some conversations about whether or not the amount of capital that appears to be floating around can actually be put to work. I had the opportunity to attend the Africa Venture Capital Association conference in Lagos in May, and I was really struck by the number and amount of capital that was represented in the places that it came from. For example, the New York Common Retirement Fund, which is the second largest or third largest pension fund in the United States, was there, and they were going on from Lagos to visit other parts of the continent to see what the opportunities might look like, and this was a first-time trip for that institution. Kamehameha Fund, the Hawaiian Educational Foundation, which is one of the largest institutional investors in the world, came all the way from Hawaii, and I can tell you from prior experience, they don't travel. You go to them, they have so much money. So the question is, there does seem to be quite a buzz about Africa. Do you think the money will get invested, and do you think that there are attractive opportunities that can be structured in a way that would satisfy these institutions' needs in some, reasonable time frame?
Yeah, I think that's really a good question, because the key issue now, of course, is we've overcome the initial question of, is Africa bankable? Is it worth investing in? I think everybody is very clear with that. I think now the bottleneck really is investment opportunities, and what it takes to create those, whether you're talking about bankable opportunities or you're talking about sponsors coming in and developing those projects. There's a big cost up front that needs to be dealt with, and even the private sector has limits in terms of how much they're prepared to put in up front. There's a lot of discussion these days in infrastructure financing circles as who's going to do the heavy lifting, who's going to provide the early stage risk capital. Risk capital, you have two types. You have the normal equity, but you have that piece that comes even before equity, and that's a piece that is not easy to get into projects, and it just
may I
requires
interrupt?
a
Might
lot.
that not be the role of the DFIs?
Yes, in fact it is. I agree with you, and the good thing, of course, is, you know, for instance, at the turn of the millennium, when infrastructure became formally a policy priority for Africa, a number of multilaterals led by the ADB at the time created special facilities to deal with this gap. I think it's called the IPPF. Mr. Boma's here; he might refer to that. But I mean, it was an innovative facility. It provided that kind of risk capital, but very small in the context of the need. So I think it was $25 to $45 million over a couple of replenishments, and it involved one or two donors coming into the party. But you know, when you take the rule of thumb of what it takes to prepare an independent power-producing project, you're looking at anywhere between 5 to 10% of the capital cost that needs to be spent up front in terms of feasibilities, pre-feasibilities, and all the diagnostics that need to go in up front. And the question is, you know, for $100 million, you're talking $7 to $10 million. How many of those do you have at any given point in time? So a facility such as the ADB's would be very quickly consumed. DBSA had one when I was there some years ago. Again, very small, $10 million. These are symbolic amounts. The institution that's really put in a lot of money into a facility of that nature is the European Union. They've put in $600 million. It's called the EU Africa Infrastructure Trust Fund. And that's a very interesting facility. It's huge, and it's got a lot of flexible money in it. And it can be drawn, I think, for all sorts of, I've even seen them put some of that money as equity into one or two projects that needed a little bit of equity to shore up that particular project, the Turkana Wind project in particular. So there's, I think there has been a response, but it's nowhere near the actual need that's out there. And the question is, how can we further de-risk the business environment in the infrastructure space to help private companies actually fork out this early stage risk capital? Partnering is one thing, but there's more that can be done.
Well, each of the, which I promise I will get to you, but Africa Finance Corporation just raised their, Adesegun just raised his hand to say they do this sort of thing. Clearly, the Islamic Bank, Development Bank puts together transactions, and you do the same thing. So what Exim Bank needs, I believe many people know that we do not structure deals and originate transactions. They have to be brought to us. So each of you would have the ability, I think, to bring transactions to us that might be opportunities for bankable transactions.
Absolutely.
Exactly. Uche, we've had conversations in the past about, specific to Exim Bank, but to other international investors that are looking to put money to work in the power sector in Nigeria, and the requirement from most for a sovereign guarantee, and it's been made very clear that that's not going to be generally available. And so we were exploring ways to create alternatives to that, and we've specifically discussed the possibility of creating a fund that might even be internationally rated that could serve as a backstop to the sovereign for particular projects, obviously very selectively. Sure. Can you tell me, is that gaining any traction?
It is actually. We've had conversations about how do we help facilitate, and I don't want to use the word guarantee loosely, but because NSIA as an institution cannot provide guarantees. However, we can invest in something described as a monoline insurer or something that provides credit enhancement. So we've been working for a while now, for almost a year, on a new facility called the Nigeria Credit Enhancement Facility. The idea here is this. Now, there are three ways we think this could be very useful. Number one is to try and use it as a vehicle to draw in latent pools of capital that are today not participating in infrastructure funding, and I mean insurance companies, pension funds. So before we even go out to look at other sources of capital, can we look inside and see whether the pension funds in the country are able to participate in infrastructure investing? As it is today, it's difficult without some form of credit enhancement. And so this is a discussion we've been having, and for the last year, we've been working very closely with Garantco to develop this. And it's gaining traction it's gone through the first phase of business development. We've had discussions with a lot of people, both on the supply side and on the demand side. But then, and there's a lot of interest across potential regulators and potential investors in this area. And we believe that when if such a vehicle gets set up, it should be able to mobilize enhancements to the tune, with reinsurance, to the tune of 20 times the capital invested in it. So if you had $500 million of equity or total capital in it, you should be looking at something in the order of $10 billion of credit enhancement. Now, how do you use this? How do you use this? First of all, as an exit mechanism for infrastructure investments. There are many things today that are equity in the country where the government has significant equity. Let's take, for example, toll roads that are completed. A bond on those toll roads with some credit enhancement can get investor base from within the country, like pension funds, to invest in it. So that's really is a broad vision of what we think such a vehicle can achieve. And that is mostly as a way to mobilize internal capital, but also it makes it more interesting also for external capital that want to use such a vehicle. So this is something that has been ongoing, but it hasn't come to the point where we can start looking for capital investment yet. And I think give it another few months, and I think it will get there. But a lot of work has gone into this, and that hasn't slowed down at all. So I believe that will be one tool, but it's not sufficient. I still think that certain types of projects will still require sovereign guarantee, and there are all forms of products out there, that are in discussion, ranging from straight-up guarantees to a put-call option product that I think has been developed both for power and also being developed for the motorways investment we're making. We are co-developing this toll road. It's a toll road and a bridge. It's 12-kilometer bridge crossing, but also supplemented by 28 kilometers of road. And you start to think about what sort of vehicles you need to enhance this and make it investable. And all these things are in play in terms of what we think by way of products that can help. So, again, it's one tool. It's one tool of many things. World Bank partial rate guarantee, all of those things are all very, very necessary to make infrastructure bankable. And so to the extent of the conversation, but again, these things take time to develop, making sure that both the demand side and the supply side are evenly matched is really kind of what needs to be properly developed. And we're at a point where I think it's getting significant enough traction that soon we might start talking about it in more concrete terms.
Thank you. I would like to open it up for the audience to ask questions. So we have about 10 minutes left.
David Wilcox, Regis County.
You might need to talk a little louder.
I'm curious about how many of you had representatives in New York at the climate conference, and what those representatives were doing at the climate conference, and how you compete the big projects that everybody wants to get funded that are huge with what Al Gore would say, 79% of the 79 countries in the world, solar is less expensive than the traditional grid technologies. That was his comment in New York. And how do you look at things like this? I'm charging my cell phone with a solar panel, that aren't big projects, but have the potential essentially to get to families in the individual African countries where families with young entrepreneurs who could be studying and becoming the business leaders of tomorrow are not going to be reached by these big projects, but they could be reached by an in-home 8 hours of sun gets you 50 hours of light solar solution. Curious about how all that stuff comes together in your organizations around these huge projects.
Mohammed?
Okay, thank you. Okay, I'll try to take part of the question regarding climate conference. Maybe we were not there, but I know that some of our colleagues did participate in the New York meetings. However, this issue about climate change and also environmental aspect is very, very important in our agenda in whatever we do. We're part of the global, I would say, initiative. We're also part of the harmonization with the other NDBs when it comes to really environmental and social safeguards when it comes to top projects. Now, talking about renewables, maybe, yes, it's true, maybe at the beginning, maybe the cost is high. However, as the technology develops and as the industry really kind of cooperate in development of simpler solutions, I think maybe the economy of scale, and I'm not the expert in here, but maybe it will become more and more, I would say, accessible. Now, talking about solar, I am very proud to say that we have a very successful example, which we always has been a model which we are marketing. We financed a project in Bangladesh, in some villages, through microfinance, and it's really addressing this issue about solar panel, where it was a community-driven project with small financing, microfinancing, to small shops, households, small classrooms, where we were able, with some, I would say very simple solar panels, to, I would say, energize villages where they have now light and they have electricity to deal with basic needs, whether it's education or in the shops, etc., etc. So this model has been successful, and now we're trying to replicate it. As a matter of fact, the same agency that has implemented this project in Bangladesh, we're trying to introduce them to some countries in Africa to replicate this model. So again, maybe this is just a small, I would say, contribution, but definitely bigger solutions when it comes to renewable wind energy and solar and others, hydro, they're high on our agenda.
I would just add that Power Africa has a very significant component that's around renewable energy and clean technology. And 3 agencies of the U.S. government, Exim Bank, USTDA, and OPIC have a center in South Africa that is meant to be a clearinghouse for transactions that may be appropriate and where we're looking to identify opportunities to invest in or support the development of renewable projects. Exim Bank is not a development agency, does need to be able to determine how it will be repaid. So that when you're talking about smaller opportunities may be a little difficult for us, but we are looking at them. We have about 5 minutes left. There's a gentleman over there. You can bring the mic.
Hi, my name is Robert Knutson. I'm president of Omni Housing, a low-cost housing company. The cornerstone of successful societies and happy societies is the home and the family. Would you, gentlemen, please tell us what your entities are doing to promote basic home ownership for the regular guy and gal, and how we can help you in that endeavor? Thank you.
Uche?
Knut, it might have been helpful to know what you do before we can talk about how we can work together. But let me talk about what NSIA has done. And real estate, when I describe real estate, is one of the areas where we've invested, or one of the core areas we're investing. It ranges from affordable housing all the way through to commercial real estate. One of the things we observed in Nigeria was the absence of a wholesale funding mechanism for mortgages. A country with 16 to 17 million housing deficits, there's only 20,000 mortgages written. I tried to get a mortgage recently, and they told me it's 28%. Now, who pays 28% for mortgages? It makes no sense at all. in New York City, I paid 2.8% when I lived there. So that just gives you an idea of the order of magnitude. So the question becomes, then what do we do? We invested in, we're the biggest investor in a vehicle called Nigerian Mortgage Refinancing Company. And that is equivalent of, should be equivalent of Nigeria's Fannie Mae when it grows up. It's only just started. We've raised the capital for the first phase, and the management team has been put in place. And the idea is to try and provide wholesale financing. The key challenge is obviously, and I didn't tell you, the offer from the bank at 28% was for 7 years. So it doesn't work at all. So the challenge now is, with this investment, we expect to extend the duration to something fairly reasonable, and in terms of 10 or 20 years, tenure, and take the cost down. And I think it's going to be one major vehicle that will make it affordable for people who have a job, have a salary, who can demonstrate ability to pay, to get involved in that market. So mortgages, I think, is one way to start to deal with this. And so that's one investment we've made. In real estate also, we have advanced conversations. We have a partner with whom we're working on real estate, from luxury to housing real estate. It's a project that we have, again, NSIA has actually actively been investing for just over a year, so a lot of these things are advanced stages in the pipeline, but we've made an announcement of an MOU with this partner out of the Middle East to work on providing housing solutions. So there's a lot being done there, but again, let me step back and say, I understand the social bent of your question, but we're doing this because it's good business. NSIA is in this because the returns are quite significant, but more importantly, believe it or not, but the quickest way to gain full employment in a place like Nigeria is to develop the housing sector. You create jobs for plumbers, you create jobs for electricians, bricklayers, all sorts of people get employed. So it serves two benefits. It serves the benefit of providing, fairly credible means of investment, 16, 17 million housing deficits in Nigeria, and then has all these other social benefits as well.
Thank you. I think we are out of time, and I'd just like to thank our panelists. I think this was a very, very robust conversation that we had, and I hope the audience learned a lot. Thank you very much.
Thank you.
Just have you, if you could just wait there throughout the final presentation, I appreciate it very much. Thank you. No one in the United States, certainly no one in the banking, the Exim Bank, fights harder for Africa than Wanda does. And she needs all the support and work and support that we can possibly give her, but certainly has been one of the top champions in Washington and certainly in the finance world for Africa. So thank you for moderating this. It's now my pleasure to introduce the last guest speaker of this conference, Mr. Charles Boama, who is Vice President of Finance for the African Development Bank. The African Development Bank is the newest, or maybe the second newest. I understand somebody else joined us today, but the African Development Bank has joined the Corporate Council on Africa. I think it's going to be a great asset for our companies that are interested in developing, and I hope also that we can support the African Development Bank in a far more active way as part of this new partnership. Mr. Boama has had a past role in the bank as Director and Controller of the and since joining in 1996, he has assumed a variety of responsibilities and also initiated, participated in, and served as executive sponsor to a number of bank-wide affiliates. In July 2004, he was appointed to the Board of Directors of the African Export-Import Bank. Mr. Boama.
Thank you very much, Mr. Hayes, for the introduction. Very kind words. It's a pleasure to be here, and it's an honor to represent President Kaberuka, who couldn't be with us this afternoon. I think my colleagues have said just about everything that needs to be said. My job is actually made much easier. Let me, for those that may not, and I suspect there are probably not that many in the room, but let me just say a few words about the African Development Bank very quickly. We actually celebrated our 50th anniversary this year, It's made up of 79 member countries, so all African countries, and of course, then we have North America, so the U.S. is one of our largest shareholders. And then in Asia, and of course, most of Western Europe are all members of the African Development Bank. So it's a AAA rated institution, has been for many, many years. And we operate across all sectors. But I think when you look at our just areas of operational focus, clearly infrastructure plays, I think over the years, easily some 60% of the work we do is in infrastructure. So that's always a major focus of what we do. I think my friend from the Islamic Development Bank was saying that they probably refer to them as the infrastructure bank. I think we've been similarly called the infrastructure bank for Africa. I'd like to, and over the years, in terms of our capital base is about 100 billion, and that's the bank itself. Now, the bank group is made up of the bank itself, which has this 100 billion capital base, and the African Development Fund, which is like IDA, for those, of course, I think since we're in DC, we're talking about the World Bank Group is the equivalent of IDA, the concessional window, which replenishes every 3 years, and then the Nigeria Trust Fund, which was set up, I think, in the late 70s by Nigeria. And then we have a number of other special funds and trust funds. So it's just a number of sources put together to finance various projects on the continent. And in terms of numbers, since the establishment of the bank some 50 years ago, we've invested over 100 billion and as I said, a lot of it in infrastructure. Last year alone, about 7 billion, but that's just the direct investment. And when you look at the multiplier effects in terms of what we crowd in, easily, if you look at just last year alone, easily we'd be talking more than 30 billion in terms of brought into infrastructure. I'd like to spend the balance of the time, and I know I only have about maybe 7 minutes left, to talk just about touch on three main areas. One will be, we've talked about infrastructure. Allow me to just talk about, when we look at infrastructure, what we're really looking at. I think we're looking at the transformation, the effects on the transformation on the continent. And we're looking at also what it does to the big issue of inclusion. I mean, just how do you make sure that development touches, that we're doing big projects, yes, you're doing smaller projects, yes, but how does it affect lives? Just as a side note, I think it was 3 years ago, I was at an event in Cairo, and it was a lady from the Nairobi Stock Exchange who saw me, and she realized I was from the African Development Bank, just rushed to me and said, "You saved my life." And I said, "Well, what in the world have I done?" And she said, "You're from the African Development Bank, right?" I said, "Yes, I am." And she said, "You know, we just completed the Thika Highway, and for those that are based in Nairobi, there's the Thika Highway project. When the project was first sort of conceived, I think it was going to be maybe a number of lanes, that sort of thing, which would have solved the congestion problem for today. But clearly it wasn't going to solve the problem for the next 50 years. And so it was resized and essentially many, many lanes on each side and access roads and all the other things. And making a long story short, essentially the commute, this lady was saying her commute to work was easily at least 2 hours. And she has to drop her kids off to school. And so she had to drag kids out by 6 o'clock just to get them, drop them off, and just to make it to work at 8 o'clock. Now there's this highway, takes 15, 20 minutes to get to work. And what she said that really touched me was that now even at lunch, she can do her lunch break, she can do a quick trip home to the kids' school or daycare, or wherever it is, visit them, and so just imagine the difference in the quality of living of this person, just instead of waking up at the crack of dawn and just dragging kids out, now they can have a good breakfast, etc. And for us, this is what is really at stake here when we talk about it. Stories like this that really give us the energy to push on, to make, and that we're not talking numbers, 100 billion, whatever, but it's really what does it mean to, in terms of transforming lives, making a difference in quality of lives. The gender dimension, of course, extremely important. We can tell stories about infrastructure projects that we've done, some road projects, the Harper Fishtown project in Liberia, where, you know, basically the trucks wouldn't take the women because, I mean, it was such a terrible road. If the truck broke down, they need men to push. So they had a preference for men so that they could push the trucks, get them out of the mud should the truck break down. And now, of course, things change very dramatically. I tell these stories just to put a human dimension to the infrastructure issue that I know we all know this, but when you tell these stories, I think it brings it home, at least for me. And it helps also in the structuring of these projects that you look at, if it's the road economics and all the things that it changes along the way. So this for us is very important. We do hard infrastructure, we do soft infrastructure. On the soft side, extremely important. In fact, you can say that many of the things we do, one way or the other, touch on essentially being able to do the work better, being able to do better work on infrastructure. Give a couple of examples. If you're doing so, we put money into vocational and technical training, and yes, so you're trying to get more skilled plumbers, electricians. Uche, I think, just talked about you know, what they do and essentially the housing market and how that affects, provides employment. But you need these skills to, of course, not only build the infrastructure, but also to maintain them over time. And so the work that we do there, we see as also a contribution to the infrastructure equation. And just as importantly are all the some of the sector reforms. Recently, our board, and I think across the street this morning, there was some discussion with Angola. I think they had a presentation. And very recently, our board approved essentially an investment of $1 billion in Angola's power sector reform. Angola itself is putting quite a bit of money in there. And why is this important? I mean, it's a major project to really reform the entire power sector and this, of course, makes it more attractive when you talk about tariffs, et cetera. So these are all things that we do that we believe, in addition to the direct investments in infrastructure. Let me turn very, very quickly on how do we work, and this, by here I'm referring to the importance of partnerships. I look at my colleagues here and my good friend, Dr. Akin-Olugbade, at the AFC. We've partnered with them. We partner with, of course, the Islamic Development Bank. We partner with PTA, as well as many other institutions. Now, for the partnerships comes in different forms. There are ways, some that we actually have direct investment, equity investments in some of the, for example, in PTA. We also have co-financing arrangement where we actually co-finance projects. And I think a good example, I think Adesegun, Dr. Akin-Olugbade talked about the wind project in Cape Verde, Cabiolica, where we co-financed that with them. And I think on the island of Santiago, in Santiago, yes, in Cape Verde, I think that provides about 25% of the energy for Cape Verde, for that island. So, I mean, just tremendous effect, talk about clean energy, and of course, those are very important aspects. So, the importance of partnerships, and along with partnerships comes, of course, a coordination that is necessary to ensure that the countries get what they deserve. I will skip this very quickly and just talk about some of the instruments that we use. Again, I think in the conversations I heard about partial risk guarantees, partial credit guarantees, various risk mitigation tools that are used. And of course, we do have that. I think a recent example is Lake Turkana in Kenya, which is a 300 megawatt wind farm. That we used the partial risk guarantee to essentially provide partial risk mitigation for delays in construction of the transmission line. So, I mean, again, all of these is a combination of partnerships with institutions, different instruments that are used to make these projects bankable, make them attractive for businesses such as some of the ones represented in this room to participate in. And as well other vehicles that are used. And here I will talk about, there's one actually that it's gaining a lot of attention lately, is the African Legal Support Facility. And there, Dr. Akin-Olugbade here is actually the brainchild. I mean, he actually conceived that idea many years ago when he was with the African Development Bank, and so we thank him for that. And it's one that, why do I mention that? I think when you talk about infrastructure, of course, these are long-lived assets, which over 25 years, 30 years, a lot can happen. And it's on the front end when these the contracts, there's a sense that they have been fairly negotiated, etc., by good teams, solid teams on both sides, as opposed to what has been in the case in some cases where it's very lopsided. You have very strong teams on the side of the investor, and then of course the countries, particularly those with weak capacity, don't have. And so the African Legal Support Facility, in my view, is one instrument, that vehicle that is helping to balance things a bit, to create fairer contracts, which then can also stand over time. And in my mind, that reduces the risk of renegotiation, which of course is a risk that many are concerned about. Let me end very quickly. I think we were asked to just talk just a little bit about what are some of the new things we're doing. Everything we've talked about, new partnerships, new instruments, I mean the different instruments, PRGs, PCGs, etc., they're all nice and good. But Africa is growing, you know the numbers, 5–6%. A lot of the growth in the population is of course migrating to the urban cities, urbanization. I guess the theme of the conference, building resilient cities. And with all of that, essentially, yes, us in partnerships with others, using all the different instruments, simply not enough. It's just not enough to keep up with the pace of things. So we believe that a lot more needs to be done. And it's for that reason that the African Development Bank, working very closely with the AU, with NEPAD, we basically went to all the capitals, basically sponsored the Africa 50 initiative that many of you have, I'm sure, heard about. It was incorporated in Casablanca a month ago, and so it's just about to take off. And the whole focus of Africa 50 is to help accelerate infrastructure development, having two vehicles, essentially a project development piece. There's been a lot talked about that this afternoon. I will not delve too much into that. And then the project finance piece. On the project development, essentially, we're looking at $500 million project development fund that will be used on a revolving basis. And the African Development Bank is looking to put 100 million of it, with 400 million to come from the private sector. We believe essentially our $1 should pull in $4. And why is this important? I think just about any such conference or meeting you attend, the one thing that is repeated every time, and it's almost ad nauseum, well, we don't have a lot of bankable projects, and all this stuff. Yeah, that is true, but how do you get there? And we say, well, look, we put in some money there. The companies that collectively stand to benefit from a substantial increase in the number of bankable projects stand to gain by also investing in this project development, which, by the way, is an investment. And it's not a grant, it's not throwaway money. In the long term, they stand to gain, and it's really in their interest, and in all our conversations, this is gaining traction, and we believe we'll get there. On these, with these few comments, I'll just stop here in the interest of time. It's a pleasure to be here. It's an honor to have had a few minutes to share with you what we're doing out of the African Development Bank, and I thank you for your kind attention. Yeah.
Thank you to Charles Boama for the remarks, and fitting, and welcome to CCA. What we wanted to do in closing this is to present to the African Development Bank and really to Donald Kaberuka for his outstanding leadership and his outgoing president of the African Development Bank. The Board of Directors voted on Tuesday to present to Dr. Kaberuka an award for his achievements, his exemplary, and let me tell you why, the 4 reasons why we're doing this. His exemplary leadership under which the bank finished its mutation into a modern international institution, the great strides he took to transform the African Development Bank into a business-friendly institution, his leadership role in transforming the bank into a major investor in Africa's infrastructure sector, exemplified by the new initiative that you just heard about, the Africa 50, and as a specialized financial institution to accelerate the provision of infrastructure in Africa, and finally, in leading the bank back to its statutory headquarters in Cote d'Ivoire. So to this, there you go. All right, we would like to just, you don't need to open it, but please present to the president, and thank you very much.
Thank you. I'll make sure he gets it.
Okay. All right. You may want to keep it. Right. Thank you. And in closing the conference, I'd like to thank all of you for participating, and though many who are not here in the final stages also for participating. It's been an exceptional conference in many ways. And I would also be remiss, of course, in not thanking the sponsors. There were 31 sponsors, so I'm not going to list all their names. I did that at the beginning of the conference, but we're very grateful. This organization cannot exist without membership and sponsorship throughout. So thank you very much. We've had a very strong year. We're going to finish the year very strong with a trade mission coming up to Zambia, Zimbabwe, and Tanzania, and then to a second trade mission before the end of the year to Kenya, Rwanda, and Uganda. We hope that many of you will participate in that, and then it's really almost the year-end event now in Washington. On December 16th, our awards dinner where we will honor outstanding African business leaders. So thank you very much. It's our honor to serve you. Please come and see us. Join us if you haven't, and we will work for you. Thank you very much.